Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Tuesday, January 30th. Today, the most important data that we got is JOLTS job openings, and it came way hotter than expected. We were expecting 8,075,000, and we got more than 9 million. And job quits lower than expected. So basically, the labor market is still quite strong. And the Fed is not going to be happy about this data. So this is two misses for today. And well, it is what it is. We have to really wait and see what Fed does tomorrow. Most probably in the Fed interest rate decision is going to hold again at 5.5, but the interest rate path in terms of cuts moving forward, it's more and more far away from the estimation of the markets. And basically, this strong labor market is going to push down all these probabilities for interest rate cuts. Still in March, we are pricing in with 60%. Remember, this number was 40, 45, even 50. And now it's 39 with 60% of probability for a hold again in March and the first rate cut in May. So this is what happens when markets get ahead of expectations at their own pace, and the Fed it's again and again saying, be careful with your expectations. This was super aggressive. And another hold here in September, November. So more and more, this is going to be adjusted and a correction is going to happen in the markets. And that kind of correction, it's like the one that we got today. So this is yesterday. This was a really push higher consolidation and then the big spike after the Treasury said that their needs for debt issuance in terms of bonds is going to be lower than expected. So market really said, okay, so less debt, nice. Bonds going lower, yields, bonds going higher, bonds prices, yields going lower, and the stock market just pushing and pushing. So today was a really tricky day in the overnight because as you can see, we had this liquidity that got taken. This was a divergence between the S&Ps and the Nasdaq. I took this trade around down here. So basically, let me just put it here. The inverted fair value gap got run through, and with this fair value gap, and my target was this. So this was $600 with 8 points profit. Really nice. And I was really expecting, my target was this one, this liquidity, but I was really expecting the market to take these highs because look at this. We are with these highs, these highs, these highs, these highs, these highs. This is a lot of liquidity and we are not taking it. We are not taking it and we are basically dumping today. As you can see, I have this fib retracement for the golden pocket. This is the level that I was watching and the market just went through. And this liquidity that just got taken right now is the only opportunity that I think we have right now for a long and a correction. So basically this move down, if we take the fib retracement from top to bottom, basically we are targeting this, that in terms of liquidity is going to be this level. And if this holds this bullish structure, we can just take along basically right here with the target on this liquidity. This is a 2.31 ratio. This is the only thing that I think is viable if you are going to continue watch the market. But be careful because right now everything is in red. Apple is minus 1.85 and it's the sole reason of the market dumping. And today it's going to be Microsoft and Google and AMD reporting earnings. And on Thursday, it's going to be Amazon and Apple. So watch this, because if Apple is this week, Tesla is this week, Amazon is minus 1.53, perhaps this is not only about JOLTS job openings. Perhaps it's about earnings. And earnings is this week is pretty huge. Big tech companies, more than 10 trillion market cap, is going to report earnings. The expectations are really high. As you can see, we are seeing a nice move here, but I don't know about this. There's no fair value gap in here, so this for me is a no-go unless you want to risk it for the biscuit. But I really don't recommend this. I think our best move. I just took this trade, and then I was waiting for this to really resolve. It took to the downside. I was waiting for this push higher. There's a lot of liquidity up here. A lot of liquidity up here. This. So at some point, we might revisit this, but it has to do it after the bell when they report earnings. We can do things, crazy things, as you know, the Nasdaq is capable of. But I don't think today is really a good day to push trading into the afternoon. Everything can happen, and we are super weak today. In my view, in my opinion, it is better to wait for the data, and tomorrow there will be plenty of opportunities with the earnings already released and also before FOMC in the afternoon. So that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel because I upload videos like this one every single day for market forecast, market updates, and market recaps. I appreciate your time as always. Remember that the training day is not over yet. This week is going to be patience, discipline, and risk management. Those are key for your success. Remember that. Stay safe, everyone, and see you tomorrow.